Hello everyone. In this video, I am going to break down the price action of Bajaj Finance. We will use the price action, CPR and the key historical level to analyze what happened today. So what happened is today we started with a bearish candle, and if you had marked the previous day low, because previous day high and low are very important levels, first 5-minute candle actually closed below the previous day low. So if someone took a put option expecting it to fall till 9,000, because here is where next pivot level is. So this horizontal line is the CPR with the colored line, and we have different pivot levels R1, S1. So it's very easy to assume that if the previous day is broken, it would take support somewhere here. So if you had taken put option hoping for a small scalp, what happened here is that the price reversed suddenly from this level. And why did it reverse from here? If I draw a line here from where it exactly reversed, and if I zoom out a little bit, we see that this level has been acting like a historical demand zone. So market remembers even old support and resistances. And so that's what exactly it reversed, and so this two red candle was a trap. It was created by hedge fund so that the breakdown was a trap. And after this trap, so this level, because historically it has been support at many days like May 15th, 14th May, you see that zone has been a support. If you had marked that level, then you would know that there is a support there. And after that, the price, what happened is that we saw a strong bullish momentum kicking in, and it actually, this green dotted line is a weekly pivot. It cut through the weekly pivot, even the CPR, and then it went all the way, even it broke the R1 pivot level, and then it reversed suddenly from this strange level. Why did it reverse from here? If I draw a horizontal line, I am sure that that zone would have been historically. If you see here, the May 19th, that zone, as soon as the price opened there, it fall. So if you had marked that level, even here, the prices reversed from that level exactly. So that means that here, even here on May 16th, and so that level acted like a resistance. And so if you had marked that, you know that it was a resistance, and as soon as you had a bearish engulfing, the price fell and it decayed within the consolidated within the CPR range. So why, it means that here at 9277, this zone, we have the many institutional sell orders or algorithmic based resistance was sitting here. That's why we see that multiple times this zone has acted as a resistance. And here similarly, there was a support here. If we see multiple times, this has acted as a support. So let's talk about the ideal trading setup that are visible in this chart. So the first setup that I see is that we could have entered a bullish entry on the weekly pivot breakout. So exactly here at this point, we could have taken a call option. It's because it reversed from the historical support, and then it's going to get a momentum. So at least till pivot, we could have entered, keeping stop loss somewhere here. This is a classic pivot breakout setup. And why this setup is because it was backed by strong bullish candle. These three candles were very strong, and then you don't have any significant resistance till CPR here or even till R1. And the second opportunity that I see is if you are an afternoon trader, after this huge rally, you see this bearish engulfing candle, you know that this is a historical resistance based on the market, and you saw the bearish engulfing candle. This is a strong reversal sign. So one could have entered a put option somewhere here, keeping stop loss somewhere here, because this is the first bearish reversal. We had a wide CPR, so we could have taken trade from here until, or even till here, a small scalp. Apart from that, I don't see any trading opportunity today in the Bajaj Finance. I hope you learned something. Key points to remember is we should not chase breakouts blindly, because for example here in the first two candles, here this was a trap. If you had entered put option thinking that previous day low got taken away, there was a hidden historical support level here, as I discussed. And so this was a trap, and then price reversed extremely actually. Yeah, and also if you had entered call option here, you would have trapped thinking that R1 got taken out. Then it reversed because here there was historical resistance. And also, if within 1 hour, if there is a huge price movement and if there is a wide CPR, prices normally tends to reverse. And so you should have looked for reversal here or reversal here. Those are the two setups we could have traded. But again, marking historical levels is very important. They act as magnets or barriers for the price movement. And here the trend reversal was the best setup that we could have traded. Again, this video is for educational purpose only. I'm not a SEBI registered advisor, and nothing in this video should be taken as a financial advice. You should always consult your financial advisor before making any trading decisions.